Morning, Top Gun here. Thursday, February 4th, a little after 4 a.m. Pacific Standard Time. This is the YouTube pre-market commentary. Market stalls at all-time highs. So yesterday actually turned out to be a pretty interesting session, despite the fact that the S&P was up 0.1%, the Nasdaq was down 0.02%, and the Russell was up 0.38%. So on the surface, it's just an ordinary, boring, nothing day, a digestive day, as Scott Redler characterized it in the morning. That would be healthy for the bulls to consolidate the gains of Monday and Tuesday. However, it wasn't looking like that at 11:30 a.m. Pacific Standard Time, when the Nasdaq was at 13,700. Now the all-time closing high from Monday, January 25th, last week, is 13,636. So the Nasdaq was trading 64 points above that, say 0.5%, and it looked for sure like the Nasdaq was going to make a new all-time closing high. What happened next was it dropped about 200 points in the last hour and a half, and with a final plunge down in the last 15 minutes, it closed at 13,611, missing a new all-time high by 25 points. Now, you might not think this is significant, but it is, because technicians watch these levels, and they want to see new all-time highs as confirmation of a new leg up in the bull market. Now, the S&P 500 didn't get to a level that would have made a new all-time closing high. It got up to about 38.47. The all-time closing high from last Monday is 38.55, and then it sold off in the last hour and a half as well, 17 points to close at 38.30. So if you look at if you look at the major indexes, and you look at some of the ETFs and stocks that I like to look at as a measure of risk appetite, which I've included in a table in the blog, you see that nothing's made all-time highs. A number of things, the S&P, the Nasdaq, the Russell, the ARK ETF, and the QQQ are all within 1%, but they haven't got there yet. And yet, the VIX, after spiking 62% last Wednesday, the third biggest spike in one day in history, has now had the biggest 3-day decline in history this week so far. So there's no fear in the market. Last week has been completely forgotten, but we haven't quite got there yet. We haven't quite erased last week and made new all-time highs and put it in the rearview mirror. It's almost like a football player on a breakaway, celebrating and prematurely dropping the ball at the 1-yard line. We've all seen that so many times. Finally, I want to talk about PayPal earnings. PayPal is a 300 billion plus stock. It's got secular tailwinds at its back as money moves digital with PayPal, Venmo, Cash App. They're the leader in this space, and so I like their business longer term. And they did report a solid quarter with total payment volumes up 39%, revenues up 23%, and non-GAAP diluted EPS up 29%. They also guided 2021 revenue growth to 19% and non-GAAP EPS growth to 17%. The problem is, if you do the math and you take the 388 they earned in 2020, tack on 17%, back out the net cash on their balance sheet, and do the math, I think you're getting a multiple of around 56 times forward earnings. That's not expensive. That's bubble territory. All right, that's it for today. See you guys on Friday.